Hello, welcome to Groot's Technical Analysis. I am Groot, and I'm going to show you a little bit about the 821 EMA strategy today. If you're someone who has recently bought cryptocurrencies or Bitcoin in the last year or so, you're not doing very well. How can we do better? We can use technical analysis to show us when it is time to buy and when it is time to sell, especially with crypto. It has massive swings where it can gain thousands of percent and then quickly lose 60 to 90% of that value within the next year afterwards. So how can we do better? In order to use the 821 EMA strategy, the first thing you'll need to do is go up here and try to find it. So to find it, I use this one here and I just type in 81321 with some commas in between. And I use this one by Pocket 5S. So we can click on that and it populates it to our chart. The first thing you're going to want to do is get rid of the 13. At least I do. You can use it if you'd like to. However, I find it is not useful. I would like to see when these things cross each other. So I just uncheck the 13 and I click OK. You can also do a little bit more modification of your settings if you want to change the line color, the thickness, so on and so forth. Afterwards, click OK and you'll see these squiggly lines on your chart. Now, how do these squiggly lines help you? Let's zoom in and find out. The first thing you're going to want to do is analyze what they are. So if we look here, the orange line is my 8 EMA. The purple line is my 21 EMA. Now I'm on a weekly time frame. This means that this is the average of the last 8 weekly candles. Now the exponential moving average is a little bit different than the regular moving average in the fact that it will put more weight on the more recent price than the price further back. Whereas the regular moving averages will put weight on the entire thing equally. So my 8 weekly moving average is the average of the last 8 weekly candles. The 21, same thing, but with the last 21 candles. If I move into the daily time frame, it's the same thing, except it's using daily candles. So they're different. They're going to be in different locations. The weekly is the best for this because it gives you the least amount of false signals. If we just go back to this market here, we can see that if you heard about crypto here, you probably got it in the bull market. That's how it is in most cases. Most new traders and new crypto investors get in at its peak because that's when the most hype is generated. If we think back to watching the Super Bowl, if you watched it, you saw a lot of commercials, Coinbase, crypto.com. There's a whole arena now called crypto.com arena. Matt Damon was telling us to buy crypto. That's a big red flag. There's not enough liquidity in cryptocurrency, and in order for anybody who was buying during this long period of time to actually exit, they need to provide a lot of hype and generate a lot of interest in it from people who have not bought before to make their profits. We know that now, and we can do better next time. So we want to buy crypto when nobody's talking about it. We don't want to buy it when everyone's talking about it. Let's buy it when no one's talking about it. That's the best way to do it. Or use this strategy. So if we come in here, we can see that every time this thing crosses bearish, where the 8 EMA crosses below the 21, we see further downside. And vice versa, when this crosses bullish, we see further upside. Now there are several times when this will cross and then immediately cross back down again. And that's okay. You can take your shot long here, and if it crosses back below, we get out. We might have lost a little bit, but it's nothing compared to how much we would lose if we stayed in and took this potential 70% loss. Now you have to wait a very long period of time. Bear markets take a while. The bear markets are almost twice as long, if not more, than the bull markets. That's just how history is. So if we wait, we would get in here again and quickly get back out. We might lose 5%, 7%, no big deal. When it finally does turn into a bull market again, we're going to make so much that those tiny losses are nothing. So this is how you would do it. You would get in on the cross, and then every week as the candles move, you would just come in here and keep your stop loss just below the 21 EMA. Because if it crosses below, it becomes bearish and we don't want to be involved in a long anymore. That's how this works. We just keep riding it up. Now, in this situation, I probably myself would have kept my stop loss right on this shelf here, because you can see it was having a hard time breaking this resistance going up. And then it finally did. Once a resistance is broken, it then becomes support. So now my stop loss would be here, and I probably wouldn't have gotten wicked out on this. Maybe you did. Let's just say you did, for the sake of it. You got wicked out. You still made approximately 100% on your investment. If that's the only trade you took for the entire year, you did better than 99% of investors in the world. That's amazing. Most investors try to shoot for 10 to 15% yearly on their returns. So what do? You got stopped out. Now all we have to do is wait for the next candle close over the 8 EMA, which is right here. And we get back in. So we missed out on a little bit. No big deal. We're keeping ourselves safe. We're not having a whole lot of risk here. And we just continue the process. So we get back in on the first close over the 8 EMA, and we just keep riding our stop loss below the 21. Now I'm pretty loose with this because it's a long time frame, so I wouldn't have gotten wicked out on this one either. I would have kept it pretty low. The higher you are in profits, the more loose you can be with this stop loss, but you still want to make sure you keep it underneath 21 as it rides up. You know, what's a couple percent after you're up 100%, right? So we just keep riding this up, and you can do one of two things. Actually, one of three things. You can take your profits on the first candle close below the 8 EMA. But if you look, that happened quite a few times, right? So maybe you don't want to do that. But if you want to be a little risk averse and just take your profits, you can. It's not a big deal. You don't have to nail the top. You don't have to nail the bottom. There's plenty of room in crypto where money can be made and do it in a safe way. And that's why I like this strategy so much. This strategy has been around for a long time and a lot of people use it. So we could either do that, or we could take our first close of the 21. That's actually better than the 8 EMA. Now we missed out on a little bit of profits, but we still could have stayed in if this run would have kept going. So let's just say for the sake of it, we got out at the actual cross of the EMAs. That would have been somewhere down in this vicinity. If we measure our profits, it's quite substantial. So we just made 1150%. That's amazing. And now we just stay out of the market until the EMAs tell us to get back in. And if we do that, we got out here and we saved ourselves another 58% loss potentially. That's a lot. That's a lot of money. You want to keep it. If you're going to make money in this market, you want to keep it. And this is how you keep it. You don't take the losses. The HODL mentality should be just thrown in the trash. HODLing crypto is probably the worst investment idea ever. In fact, if you bought crypto at the top in 2017 here, you're still at break even right now, almost 6 years later. That sucks, right? So the HODL mentality is dead. Please stop doing it. This is a much better strategy. So we just wait for the next cross, which just so happens to be right here. We just saved ourselves like 60% of our money, and now we're going to get back in here. And we just don't get out until it crosses bearish again, which is right about here. So we just made another 70%. We're doing really well. We get another fake out cross later on here, where it quickly crosses again below a few weeks later. So no big deal. Maybe we lost this much, which is nothing. It's 7%. Let's just say for the sake of it. We did not suffer all of this loss during the COVID drop. That's great. Now we just wait for the next cross above and try again, which is right here. Clearly see the 8 and the 21 are crossing bullish again here. We get back in and we just repeat the process, going all the way back up, and we can just sell the cross below. So we would have had to get out somewhere in this vicinity here. All right, we just made another massive amount of money, 328%. As you can see, each cycle that we get, the amount of gains Bitcoin has is less and less, right? We saw thousands of percent before. Now it's about 300 if we follow this strategy. We have another cross here, followed by a bearish cross here. So now we didn't make nearly as much, but we still made something, right? It was a little bit, so that was 12%. Actually, I think I measured the wrong way, but either way, you get the gist of it. So the best part about this is I sold everything in January. I sold all of my crypto right here, following that bearish cross. Now there was another signal that told me to look out, and that was bearish divergence. And what bearish divergence is when you have the RSI or the MACD pointing down, like this is trending down as well from the peaks right here and right here. And if you look at the price during those peaks, we were here to here. This is trending up while these are trending down. So what does that tell us? Normally the MACD and the RSI are lagging indicators. They're not going to show you anything in advance, right? But if you find divergence like this, it can actually be more of a leading indicator than the 821. The 821 is a leading indicator, meaning it's going to show you what's going to happen later on, more often than not, when the cross happens. So as you can see here, we crossed bearish, followed by downside. Here we crossed bearish, followed by downside. See? Now this moving average is great. If you can find divergence on the chart as well, that's another red flag. So this was telling you that the market was losing strength on the RSI and the MACD while the price was going higher. So this whole second top is fake. Followed by the bearish cross, I get out in January, and I haven't been a buyer since. Why? Because we're not even close to an 821 bullish cross here. All we have to do is wait for that, right? This can see further downside. How much? It's anyone's guess. The next levels below are 14, 16, 16, 14, and 12K. Totally can happen. We're returning to a previous all-time high. That's never happened before. We had a double top on the weekly chart. That's never happened before. There's a lot of things that are happening that have never happened before. Since Bitcoin started in 2010, we have only had a bull market in the stock market. After the 2008 housing crash, things went down significantly. But since then, we've just gone straight up. And that's when Bitcoin has been around. Bitcoin's never experienced any sort of real economic downturn. So this is why I think we're seeing things that haven't happened before. So don't just try to keep buying dips. You're going to get wrecked. Wait for a signal. Are you going to nail the bottom on this? No, you're not. But that's not what we're trying to do. We're trying to maintain risk management. And if you don't have risk management in this game, you're going to get wrecked really fast. So I hope this helps. This is the 821 EMA moving average strategy. It helps me a lot. It's saved me tons of money. Technical analysis is way better for saving money than making money. However, you can make money using it. We have a Discord in the DeFi Dojo. And if you'd like to join that and hang out with us, we can learn together. And I scalp things pretty much daily where I can make little bits of money at a time while we're in this sort of market, move those profits over to my cash reserves for when we do finally get a long-term buy signal. I'll have more money to inject into the market. If you like this video, please click this little button right here and subscribe so the YouTube gods will favor me. And I'll see you again soon. Thank you so much.